let's explore the various health insurance plan types. The insurance providers discussed earlier typically offer multiple plans, requiring you to select the most suitable option for yourself and your family. These plans are generally categorized under one of the following insurance plan types: HMO, Health Maintenance Organization; EPO, Exclusive Provider Organization; POS, Point of Service; PPO, Preferred Provider Organization; HDHP with HSA, High Deductible Health Plan with a health savings account. And this is where things start getting really complicated. Trying to figure out health insurance plans can be a real headache because their names often don't tell you much. Familiarizing yourself with these acronyms is essential to grasp the services each plan offers. Each health insurance plan type has distinct characteristics, primarily differing in the necessity of a primary care physician, coverage for in-network versus out-of-network services, specific figures for premium, deductible, and out-of-pocket max. These key items have varying settings across the different plan types, which is illustrated in this chart. Going through these characteristics will give you a better understanding of each plan type, so we'll go through them one by one. The chart is only to give you a general idea of how plan types differ. It's not 100% precise or comprehensive. Actual insurance providers may have varying structures that don't perfectly align with this representation. So, view this as a conceptual guide to provide a general understanding and always confirm details in the plans available to you. It's important to clarify that HDHP plus HSA is not actually a plan type itself, unlike the other four discussed. Instead, it's a financial framework that can be integrated with any of those existing plan types. For instance, a PPO plan could be offered with an HDHP plus HSA overlay. This would mean the plan retains the core characteristics of a PPO, but features a high deductible and a low premium. Now let's review the plan types. HMO, Health Maintenance Organization. This plan is an in-network only option. You must select a medical service provider within the insurance provider's network. You'll also need to choose an in-network primary care physician. Referrals from your PCP are required to see a specialist. While HMOs offer the least flexibility, they typically come with lower premiums and deductibles. Next is the EPO, Exclusive Provider Organization Plan. Similar to an HMO, it's an in-network only plan. However, the network of medical service providers is larger than an HMO. A PCP is not mandatory, and you can visit in-network specialists without a referral, offering more flexibility than an HMO. This added flexibility comes with higher premiums and deductibles compared to an HMO. And here's one thing important. HMO and EPO plans usually only cover in-network care, but they will cover out-of-network services if it's a true emergency. However, the definition of emergency can be unclear, and what you might consider an emergency may not be classified as such by the insurance provider. For situations deemed non-emergent by the insurance provider, out-of-network care is typically not covered, and the insurance provider may not contribute to the costs. The third option is the Point of Service Plan. This plan offers greater flexibility compared to an HMO, as it allows for out-of-network services, though at a higher cost. This can be particularly beneficial if you have a medical condition and some of your doctors are not within the network. A common characteristic of most POS plans is the requirement to select an in-network primary care physician who will then provide referrals to specialists. However, it's worth noting that some less common POS plans do not require a PCP referral. These types of POS bear a closer resemblance to the PPO, which is the next plan type we will cover. The Preferred Provider Organization, PPO, offers the greatest flexibility, covering out-of-network services without the need for a nominated PCP or specialist referrals. This means you have the freedom to choose any medical service provider. The trade-off for this flexibility is higher premiums, deductibles, and out-of-pocket maximums compared to other plan types. While it is more economical to choose an in-network provider for medical services, you retain the freedom to see any provider you wish. This can be particularly beneficial in situations where you might be traveling and require immediate medical attention, eliminating concerns about network status during a painful emergency. Finally, the High Deductible Health Plan with Health Savings Account. This actually isn't a plan type in itself. but rather a financial structure that alters the premium and deductible of an underlying plan. Regardless of whether the base plan is an EPO, PPO, or another type, an HDHP with HSA will always feature a lower premium and a higher deductible when compared to that same underlying plan. This real-world example compares a PPO plan to an HDHP plus HSA plan with the PPO as the underlying network from the same insurance provider. The HDHP plus HSA plan has a premium of $3,013, less than half that of the PPO that has $6,637, but its deductible is more than twice as large. In the fourth and final video of our series, we will explore more real-world scenarios. For now, we wanted to offer a preview of the total annual medical expense chart using the PPO and HDHP with HSA as illustrative examples. We hope this highlights the significance of considering the fixed cost premium alongside the variable cost deductible and out-of-pocket max. Comparing these two, which one do you think is more beneficial? And lastly, we'll quickly cover the health savings account, HSA. A HSA is a tax-advantaged account you can use to save and pay for qualified medical expenses. Here are the key features. Number 1. It provides triple tax advantage where Advantage 1. Contributions are pre-tax. This reduces taxable income. Advantage 2. Withdrawals are tax-free when used for medical expenses. Advantage 3. Growth, interest, and investments is tax-free. Number 2. Funds don't expire and rolls over to the following year. You'll get to keep what you didn't use. Number 3. It's portable. The account stays with you, even if you change jobs or insurance. Number 4. Many HSAs let you invest balances. Your contributions may grow like a 401k. An HSA is not a health insurance plan type, but it offers significant tax advantages and can serve as a long-term investment vehicle. Some companies even contribute a set amount, for example, $1,000 at the start of the year, to your HSA. These funds roll over year after year if unused, accumulating over time. Additionally, if you choose an investment option and the balance grows, this can be a substantial benefit in the long run. Having explored the various health insurance plan types, a key takeaway is the direct relationship between a plan's coverage and flexibility and its associated total annual medical expenses. As coverage and flexibility increase, so do the expenses. Coverage refers to the range of medical service providers available to you. This goes beyond the distinction between a network and out-of-network. For instance, while both HMO and EPO plans are in network only, EPO networks typically offer a wider selection of providers than HMOs. But obviously, a plan that covers both in-network and out-of-network offers the most extensive selection. A medical plan's flexibility is limited if it requires a primary care physician nomination. With such plans, you must first consult your PCP for all medical needs, and they will then decide if a specialist visit is necessary. Therefore, plans that allow direct access to specialists without a PCP referral offer greater flexibility. Ultimately, the premium, deductible, and out-of-pocket maximum figures are all interconnected with the level of coverage and flexibility, which in turn determines the total annual medical expense. In this video, we covered the 5 main health insurance providers, ESI, COBRA, ACA Marketplace, Medicaid, and Medicare, the 5 main plan types, HMO, EPO, POS, PPO, and HDHP with HSA. Healthcare provider options often depend on your eligibility, which is usually determined by employment, income, or age. The most affordable and comprehensive options are typically Medicaid and Medicare if you qualify. If not, employer-sponsored insurance is generally the next most cost-effective choice, as employers often cover a substantial portion of the premium. COBRA is a temporary available option that allows you to continue your ESI plan, but with an extremely high cost as there will be no aid from a company. ACA Marketplace plans can also be a viable option, particularly if you are eligible for income-based subsidies that help reduce premiums and out-of-pocket expenses. After selecting your insurance provider, you'll see the available plans. HMO Health maintenance organization plans usually have the lowest premiums and out-of-pocket costs, but require you to stay in network and get a primary care physician, plus referrals for specialists. There is no coverage for out-of-network care except for emergencies. EPO, Exclusive Provider Organization plans are similar to a HMO, but offers a larger network and does not typically require PCP referrals. Coverage is still limited to in-network providers, except for emergencies. POS, Point of Service plans combine features of HMOs and PPOs, allowing out-of-network care at higher costs and often requiring PCP referrals. PPO, Preferred Provider Organization plans give the most flexibility with both in and out-of-network coverage and no PCP referral requirements. Among HMO, EPO, POS, and PPO plans, HMOs offer the least flexibility and the smallest provider network but typically have the lowest overall cost. As you move toward PPOs, flexibility and coverage options increase, with PPOs providing the most freedom to choose providers, but also coming with the highest overall cost. The HDHP High Deductible Health Plan, which can be paired with a tax-advantaged health savings account, is unique because it's not a plan type itself, but rather an overlay to one of the other plans, HMO, PPO, EPO, or POS, and is characterized by low monthly premiums in exchange for a high annual deductible. Health insurance plans vary by flexibility, cost, and provider access, and your choice will depend on your individual needs, as there's no single best plan for everyone. We aim to equip you with sufficient background knowledge to make an informed decision, though we cannot recommend a specific plan. Now, take out your health insurance plan explanation document and list the available plan options along with their premium, deductible, copay, co-insurance, and out-of-pocket maximum. Next, build the total annual medical expenses chart for each plan. Be sure to annualize the premium since it's usually shown as a monthly or per paycheck amount. The yearly premium in the chart will give you a very different perspective on which plan is truly the most cost-effective. We hope this added clarity rather than confusion. If there are areas that are not clear or require further explanation, please leave a comment and we'll try to improve it in the future. In the next video, we'll put this all together with real-world examples so you can see how different plans affect your total annual medical expenses.